What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is November 12th of 2021. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to give a quick run through on the high-level overview of Bitcoin, where we stand at the moment, where we're going in the short term, and also our expectations for the long run, and some of the macro driving trends that could take Bitcoin towards these new all-time highs that we're calling for, around 200K. Now, I want to go ahead and just put some context here. Let's dive right into it, guys, on the short term, where we stand at the moment. Again, as we've been talking about as far back as May, since the correction, we've been confident that this isn't a bear market. And we have, during this period of time, again, back in July, when a lot of people were calling for Bitcoin to go to 25K, 20K, go even further down in price, we were confident we would recover. And in the last couple of months, since late July, we've been able to see a 118% recovery in price from where we stand now, and just the other day set a new all-time highs, 132% higher than those lows. Or for perspective's sake, from back here, the previous all-time highs coming up around 6 to 5.8%, right? So we have entered into new all-time highs, and we've technically entered into what's known as price discovery. Now, I want to go ahead and just talk about the community's expectations here, because it seems like a lot of people have been upset that as we've gone to new all-time highs, and now most people have come to the agreement that we've clearly not entered into a bear market, many people are worried that we're at a double top here in the market because price is just kind of charting sideways at these previous all-time highs, right? Sure, we went a little bit above it, but we've also dipped a little bit below it, and overall price isn't going absolutely vertical. It's almost as if the people who are calling for a Q4 top in the market at 100 or 150K, or even a Q1 2022 top at around those levels, or if not higher, we're possibly setting high expectations. And that is something we've talked about constantly on the channel. It is the reason where, no matter if you agree with expanding cycles or not, I gotta come clean with you guys and be honest. We've been saying it many times, and we're gonna say it again. There is no way we are going to $100,000 or 150K in Q4 of this year or Q1 of next year. I'm sorry, I'm gonna have to say it, guys. A lot of the analysts, I think, are getting this wrong, and I'll put my name to it. The reason why is because if a futures Bitcoin ETF, one of the biggest catalysts we've been looking for a long period of time, did not absolutely drive Bitcoin towards six figures or kick off the rally at new all-time highs, I don't know what else is that's going to be around the corner. What macro event could really drive institutions towards bringing Bitcoin to becoming a multi-trillion-dollar asset? But that's an important point I want to talk about. Expectations for price, but also the current environment where we stand. This isn't all doom and gloom, guys. I have an expectation that Bitcoin's going to go to 200K. But we need to understand in terms of market cap and most importantly liquidity, how we're going to get there. That's the biggest question. What's going to drive Bitcoin to becoming a $3 to $4 trillion asset in valuation? It's not going to happen overnight, and it's not going to be easy. One thing I do want to talk about, just reflect on, and this is again why I emphasized the rally we've made since back in July from around $30,000 to where we stand now, as we have made some immense progress in Bitcoin's price. We have now, since back here in October, chartered above the $1 trillion market cap range. And we can see here, people may not think this is important because valuations, yes, can be subjective sometimes. But the important thing about these big headline figures for Bitcoin, like $1 trillion, you can see here, that's where we charted around since the Tesla news back in February towards the end of the mid-cycle rally and the start of the correction. This is where valuations charted, and you can see price came around and correlated around this $1 trillion figure many times. To be able to see us holding around this $1 trillion valuation, and in fact holding well above it, and holding a couple billion or a couple $100 billion above that is a huge telltale sign that optimism still remains in this market, that we are not at a double top in the market by any means. And along with that as well, if it provides any comfort, we've never seen a double top in crypto markets. Not to say just because we've never seen it, we can't have one. It just doesn't really make sense, guys. The momentum is good here in the market. We've made a 130% return from bottom to top, our new all-time highs here over the past couple months. There's no other kind of market that has these kind of corrections, but also these kind of recoveries that still continues to clear through towards higher levels. Now, I don't want to ramble on too much about this, but Again, if we're talking about the perspective of going to 3 or 4 trillion, right, around the $150,000, $200,000 range, it's going to take a lot of liquidity and along with that as well some time to get there. And that's why we have our expectation of a cycle top coming in November of 2022, far out than probably 90-95% of the market projections, right? So again, that's something that I think is very important to keep in mind here, that it's going to take time for us to get there. But I want to go ahead and visualize that on a long-term time frame, and it might actually start to seem a little bit more rational here, right? So if we, for example, and as we'll talk about throughout the video, start to consolidate here for some period of time towards the close of this year, starting into January 2022, and then we really kick off the cycle, right? On the logarithmic chart, this is actually a very conservative ask, and outside of that, also a very reasonable one in my opinion, where basically we're looking at the 2-week chart here. This is going to be about, roughly speaking, 52 weeks or a year out from now, right? So think about it that we're calling for the top being somewhere around a year out from now. For us to get to 1.2 trillion all the way up here to 4 trillion or 200K price tag, that's completely doable. And what's so nice about this, guys, and just a reason why I always talk about setting conservative estimations, if you have conservative time frame estimates, and along with that as well, have, decent conservative but also optimistically realistic price expectations like I think we do. I think Bitcoin can easily go to 3 or 4 trillion with the way that funds are flowing versus gold and other markets. This is a really easy way to go about investing and trading the market. You don't have to stress so much. We know the roadmap here. We know that this is completely in line and actually conservative towards the general trend line here of Bitcoin's price in the long run. Right? But what we've seen in this cycle that differs from the last one, from this general midpoint line of growth, and I would argue is what differs in this cycle, is that we have exaggerated mid-cycle rallies and exaggerated corrections. And along with that, we have decaying growth return on each cycle for Bitcoin. So when we take a look at Bitcoin's market cap here, whereas in the past we used to hang above this midpoint line, notice how each and every time we get rejected at that midpoint line, right? So the idea here, maybe perhaps we do have a breakout above the line, but the idea here would be that we actually ride below this. And considering that it's the logarithmic chart, we can still have some really solid growth, some great percentage gains, but I think it's going to happen at a much slower rate than people are expecting, right? I really feel like we may not get on the logarithmic chart this blow off top that everyone's expecting, right? And if that's the case, it's going to happen later. It's not going to happen in Q4, and it's probably not going to happen in Q1. And I say that as a Bitcoin bull, right? Again, this is the key point here, guys. We've had the futures contracts trading out in the market, some really exciting developments, albeit I'd much rather have a spot Bitcoin ETF. Having a Bitcoin futures ETF is still pretty exciting news. It's definitely got people interested on an institutional level at looking at Bitcoin. There's a couple $100 million of volume on each day. You can use specific volume indicators that will take generally the volume of shares times the general average market price, and you can see here in this indicator that we're getting a couple $100 million on the BITO Bitcoin futures contract ETF. We also have as well Grayscale's GBTC, right? Same exact thing here where we're seeing hundreds of millions of dollars trading on a day-to-day basis on this exchange traded on OTC markets. Not bad whatsoever, right? And there are a ton of other Bitcoin products or futures ETFs that are going to start coming into the market. There's a couple other that we're not going to talk about today for the sake of time. But the big kahuna here, whether it happens in this cycle or later, is going to be that spot Bitcoin ETF. This is one of the catalysts we need to watch for, albeit I wouldn't say it's a guarantee for this cycle. People have mixed opinions on when it's going to happen. And again, we want to set those conservative time frame estimates. This is one of the many catalysts that could drag institutions in, right? Having a spot ETF here that not only would bring in more institutional investment, but also could be something that really is parked into a variety of pension funds and other retirement plans where you've got trillions, tens of trillions of dollars of liquidity just waiting to get market exposure. Around 50 to 60 trillion dollars of value, where a portion of that, even just a portion, 1 trillion, 2 trillion, going into a crypto ETF, a Bitcoin ETF, you could easily reach your $4 trillion valuation estimate for Bitcoin, right? Now again, we need to understand that a catalyst like this is not going to happen this quarter. I'm going to be real with you guys. The way the SEC has been approaching things, albeit they just approved the futures ETF, the spot ETF likely isn't going to get approved this quarter, and it likely won't get approved in Q1. But the rumors and the buildup might reflect in price early on, right? And that's why, again, in Q1, Q2, that's where you can start to get the momentum coming in. It's going to leapfrog us up all the way into Q3 or Q4 and get that cycle top. Then I want to go ahead and use an example here. Now, sorry if the chart is a little bit pixelated here, but this is a chart showcasing not only similarities to gold's initial rally back in the 70s going into 1980, very similar parabolic price action that we saw in Bitcoin back in 2017. But outside of that as well, it's talking more specifically about how gold, when it introduced the first gold ETF, the GLD ETF that has now recently been surpassed by Grayscale's assets under management, it talks about the correlation of how when the ETF came out to the market, the consumer ability to invest in gold in a convenient way, through pension funds, through the brokerage account, you name it, how it drove immense amounts of liquidity towards gold, established it as a market, and dragged it from being probably a $2 to $3 trillion market towards becoming an $11 to $12 trillion market, making some really solid returns, 420%, no weed jokes intended, right? 420%, not bad whatsoever, right? And the key point here that I want to drive is that Bitcoin can go through this as well, right? And whether or not it's going to be a consumer-based ETF or another catalyst, I think that we still have a good ways to go. I think we can easily see a major return from here on out going towards 150K, 200K. But it's considering the time frame estimates. And what I think is realistically going to be happening here is that we're going to be consolidating for the rest of this year sideways. I know it's not as optimistic as some other people are projecting. It goes contrarian against a lot of the quote-unquote ideas or projections that people have for the market. And look, my plan isn't foolproof, guys. I don't want you to take this as gospel, right? But what I think is very realistic is this idea that we're going to have to take this pretty significant previous resistance range, and now that we are above it, we need to solidify it as support. We need to signal to the market very clearly that we are ready to make that next leap forward, that we are looking for that next catalyst, that investors are confident that we've got more room for real urgent price discovery where price can start to move much quicker. And I think as well, it's important to keep in mind that there is going to likely be not only a rally towards 100K, maybe sometime in Q1 or Q2, but there's going to be another May-style correction with a final third rally. We saw the first one here from 20K up to 65K, then we came back down to 30,000. I think we're going to see the same here from 30,000 upward towards 90 to 100K. We're going to see another sharp correction down to something like 50, 70K, and that's going to leapfrog us up to 200K in Bitcoin's price. That's the general roadmap going all the way to Q4 of 2022, or more specifically in November if expanding cycles play out as they have in history. And again, I want to go ahead and back this up, this thought process of the consolidation. We have seen time and time again that Bitcoin is either moving dramatically high, it's consolidating for a multi-month period, or correcting heavily in the cycle. Yet again, consolidating sideways over multiple months from here in May all the way to July, rallying significantly well, consolidating, and then we leapfrog higher in price, right? That's the general idea here. And the reason why is because this market is not so much driven by institutions or new retail traders. It has been driven by excessive leverage and credit in the system, something we've talked about time and time again, and I won't be badgering or bothering you guys about today. But that's what's driving this market. And during those consolidation periods at resistance and support, those are periods of time where liquidity is shifting. The tone is starting and the trend is starting to weaken. And that's what gets us these dramatic corrections, as well as these dramatic rallies we've seen in the market. It's what makes us differ this time around from other cycles. Anyways, I've rambled on enough, guys. I want to ask you guys of a couple things. One thing that you could do that would really help out the channel, if you don't already, is consider liking our videos, consider subscribing, and the bell icon. I try not to pester you guys about that at the beginning of the video. It's only for those of you who really stick around and enjoy the content. And outside of that as well, if you guys want to support the channel, you can always subscribe to the Dash Report. If you like this kind of in-depth analysis on the market, the Dash Report is a newsletter we have down below in the description. You can sign up on an annualized basis and gives you about a 30 or 20% discount. And outside of that, It just gives you a ton of macro content on crypto, our thoughts and outlook on the market, our portfolio allocation to crypto, as well as analyzing equities, commodities, and Forex markets, as well as any trades that I go about making in the market. So if you guys are interested, check that out. We'd love for you guys to become a part of the family. Got thousands of people on board. But that being said, guys, thank you all so much for watching. It's always a pleasure to be here and make this content for you guys. And I'll see you all in the next video. Take care, everyone.